Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So you can see, based on recent performance, yesterday we not occasionally have spent a lot of time talking about the overall bearish signs that exist and speaking about the last chance for the gold to start upward action. Talked about the possible using of the intraday pattern for position taking. And in general, as you could see later in this video, that the setup that we've got on the hourly chart has worked perfect. But we've got two different performances yesterday from the gold market. Initially, when the gross domestic product has been released, and the following reaction after that was reaction on the personal consumption expenditures. Taking it all together, they are not positive for the United States economy, suggesting high inflation. So in general, drop of the gross domestic product together with a high inflation, this is 100% stagflationary background, which suggests more hawkish behavior from the Fed, which is actually could be treated as the Powell strikes back. So actually, that's why it explains why the other markets going down, including the gold market right now, and euro currency, and other forex currency pairs. So we think that this impact probably will be a bit longer term, long-lasting effect, and could last for a few sessions at least. And in general, this performance on the gold is totally fits to the scenario that we discussed last week in the weekend and 2 weeks before. We said that in the current moment, it seems that gold has reached local targets. It has utilized all driving factors that exist at this moment, and normal technical pullback, which is could be for a few months, but on the long term, this is a technical pullback, is absolutely normal in nature. Currently, we're also getting some background that supports this view. Meantime, on the intraday charts, we still could get some interesting setups because overall momentum still exists here to the upside, and market is entering the very interesting area. As you can see, it's a bit wide from the 31.70 to 32.45, but this is still two levels and accompanied with the daily result. Potentially, this is a great area to consider possible bullish signs inside of it. Maybe it will not lead to the direct straightforward upward action back to the top, but at least it could trigger more or less significant pullbacks that are definitely worth to consider. And based on the current performance, it's obviously to suggest here a kind of the gorgeous T+2 buy pattern, right? When this A, B, C pattern to the downside will be completed, this might be the reason to consider taking the short-term bullish position with a possible retracement. That's an idea that we have based on a daily chart. On the following time frame chart, you can see how everything has happened recently. So if you remember, we started our analysis from this candle, and we said that keep an eye, maybe it will become the grabber. If it will be grabber, everything could change. But you can see that nothing has been formed. Trend has turned bearish. What is more interesting, that when our pattern has been triggered and shown this upward pullback, so if you take a look at the hourly chart, that was our pattern, and that what has happened once it has completed the target. Great upward action. So if you have taken position here, I'm sure that you're get the normal result, at least the break even, or even get some positive fruits from this position, because overall pullback was really strong, and it stands for almost 50 pips, $50, sorry. So this is great. That was actually reaction on the negative gross domestic product. And result of this reaction, if you take a look at the full time frame chart, it has led to appearing not the bullish, but bearish grabber right there. So once the reaction on our pattern has been completed, immediately bearish grabber has been formed here. And take a look, next also has become the bearish grabber, and next candle also has become bearish grabber. So we have at least 12 hours to change the position and reverse those of you who trade the date releases. Then absolutely natural, normal behavior has happened. Now market stands at the COP target. So the target that we're considering stands around 31.30. This is the OP target based on this ABCD pattern. So once it will be completed, it's slightly lower than we have levels here, but that's where the OP will be done. And that potentially might be interesting to considering taking the long position. Meantime, if you take a look at this shape, we have closer standing targets. So on hourly chart, we could treat this setup as a butterfly right now. So first target has been completed around 32.30. Next one will be 31.90. So chances that market will reach it, I think, are significant just because even based on the pure technical background, you could see acceleration here. This usually leads to downside continuation to the next target. Maybe here minor retracement could happen. But in general, this target has good chance to be completed. Second reason, I already explained this in the beginning of the video, that such numbers as a negative gross domestic product and upside revision for personal consumption expenditures, which is actually mostly conservative, very conservative indicator of the inflation. And if it has been revised up, and it has been revised up to 3% on a year-over-year basis. So this is, I think, significant changes for illustration of the problems in the United States economy. And usually such a data has a longer lasting impact. So at least for a few sessions. And I wouldn't exclude the chances that it could make impact on the market within the even next year, because it really makes sense. So that and so what's what we have. For the bulls, I do not see currently good background for possible trading. The chances that war existed here, market has lost with this setup. That was the last point where it could do this, but it hasn't succeeded with that, and actually it's only that we get here is this healthy $50 bounce. And now bears control the situation. To start speaking about any bullish positions by far, we have to wait for reaching important targets and hitting of the important support areas. That should happen somewhere around daily area, and once the OP to the downside will be completed. After that, here maybe we will get something. But for now, bears are control the situation. You could try to use the butterfly if you would like to, making the scalp short position here. Or maybe you could do nothing, just wait what will happen if you prefer to not trade the data release. Tomorrow we will get payrolls, so it also could add some more fuel to the fire.